One.
Well, quite a morning we're going to have here on pre-market prep. Got some bad news. Bad news, the S&Ps are gone. The other bad news is Triple D is not feeling well, but he's still going to spend some time with us. The good news is we got a special guest host filling in for the first half hour. So that's wrapping all that up. We got some earnings. AMAC goes splat. It's a weakness on Friday, the low for the week. Warren is a day trader. Take the money and run in Ulta. This is an end of another great week on pre-market prep. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning. Quick rundown. S&P's down 27 handles off the low of the session, 59.51 the quarter. Bears are going to win the week. The buck pulling back is just after a wicked rally, down 13 cents, 106.47. TLT holding above the low of the move, down 20 cents at 90.12. USO down 6 cents, 71.23. GLD flat 237, silver flat 27.92, and Bitcoin back residing in the 90,000 handle, $2,550 to the good side. All right, so we got a lot of people to bring in. We bring in AB as usual. We'll bring in Triple D, who I gave the day off, but he has to come in.
Yeah.
And now,
so 1 second, I just want to say, so I'm feeling like not great today. I'm going to try to do a little bit with you guys, but the flu bug is just killing me. So I'm texting Joel. I'm like, we need, somebody else to fill in. So none other than you've seen him before. You've requested him, chat, and we've got him. He's pumped here. Joel, who is it?
It is none other than Money Mitch. Money Mitch back on the stage again.
What up, guys? Cha-ching. I needed the cha-ching when I come in here. Let's go. Let's do it.
Cha-ching.
We don't have all our sound bites and everything set up yet. So once we get all that set up, next time you come on, you'll have a proper intro.
Love it. Buddy Mitch, we missed you, man. Obviously, we did the show with you for a long time. You worked in the background with us as a producer for the long time. So, if you've joined the show in the last year, you may not know Money Mitch, but he's active in the chat. Money Mitch has been, I've been a huge fan. I was like, Money Mitch is coming on. I'm going to crawl myself out of bed to say hi to the guy. So I just got to say, how the hell have you been, buddy?
I've been great, man. I've been working hard, continuing the craft, right? Trying to improve every single year and been pushing it, right? Trying to day trade more and more. But really, it's been all about the Twins this year. Let's be honest. It's been a year to realize that trading isn't that hard when you have twins.
I want to see them. But Dennis, I know you want
to pictures. Get the pictures.
Yeah. I was gonna bring them. This isn't my official guest visit. This is just my spot in. Okay. Yeah, this is my spot in. I'll bring it for the next meeting.
Okay. When Dennis, I want you, before we get to the markets.
Yeah.
I want to do a little rant.
Okay.
A little bit of a sports rant, and I'll make it short. Okay. Are you guys ready? All you lemmings out there, they're going to watch this Tyson Paul fight.
Oh,
you guys are absolutely wasting your time. You are wasting your time, okay? Because the fix is it. I don't know how or why, but I can just tell you one thing about boxing and one thing. This is going on in Vegas, correct?
Next.
Yeah, thanks. Okay.
Who's winning then?
It's the second fight. Who's going to win? There's going to be a second fight. That's what's going to happen. There's going to be another payday. There's going to be another. You ain't going to knock them out. That's why they have it. They're just setting up another payday. I will just tell you what Tyson the guy doesn't stand a chance. He's 58. I know what it's like to be 58 and compete against 35-year-olds. I still kick their butt in swimming. But it's boxing is a different thing. But I'm going to tell you one thing my dad said, and then we're going to move on. Okay. My dad used to go out to Vegas a lot. Okay. Back, they used to call them junkets, and he used to play craps and actually taught Sean Connery how to play craps from one of his movies. And he told me, he said, never go to Vegas when there's a fight going on. He said, because there's always a lot of, this is probably not going to be great for advertising for Vegas. He goes, but there's a lot of scum out in Vegas. And when the fight is on, the relatives
Everybody wants
come.
to fight, man.
Everyone
Everybody wants
comes
to
in
fight.
Yep. So I am not watching that fight. I'll watch the second one or the third one or whatever, the fourth one. There'll be some kind of controversial thing that goes on. I'm not going to swear because Mitch's kids are around, but I'm just telling you something fucking funky.
Oh. Whoa.
Funky. I said funky.
Funky. I heard something else.
Springer moment.
7 years ago, it's pretty close. Funky. Okay, funky. It was funky, but it was close.
No, he said Mitch there. That's what it was.
Okay. All right, Triple D to the background here.
Yeah, well, 1 sec. I just got to skip my commentary on the Tyson fight. And then we're gonna
you can't be the only one to comment on Tyson there.
Yeah, he runs with it. This is the biggest fight we've seen in a long time. It's awesome that Tyson is coming back. Joel, I'm 100% with you. I'm sorry, folks. He doesn't stand a chance, and you want to know why? It's the 14-ounce gloves. They have bigger gloves on. They're going to fight with the bigger gloves. Tyson probably still has a punch that could knock him out. But so if he got lucky, but he's not going to have the endurance. But now that they put the bigger gloves on, they said to protect, like the age difference, they mandated bigger gloves. His blow is not going to be as powerful. And I think that was the only chance because the endurance he's not going to be able to keep up. I think the only chance was if Tyson was actually going to knock him out quick. So with the bigger gloves, it's going to be harder to do. So Portnoy was saying, stop me, Dave Portnoy. I read his tweet and I laughed out loud. He's like, you guys got to stop me from taking all of my net worth and just putting it on Jake Paul because this is like the easiest bet he ever said. I think so too. I think Jake Paul easily wins this. So I'm a huge Tyson fan. I would love nothing better than for Tyson to knock him out. I just don't think it's possible.
It acts like he's wearing pillows on his hands. Would you take a punch from Mike Tyson?
No, but these are professional boxers. 10-ounce gloves and 14-ounce gloves are a huge difference. You're going to even see it. You're going to see it. You're going to be like, what are those gloves? They're sparring gloves.
And Dennis, I know you're gonna maybe think this is silly or disagree with this. I'm just gonna throw it out there. Is it possible that Netflix's run up? I mean, it was already strong before. Right now, Netflix's new all-time highs.
Oh man,
nothing to do with this fight whatsoever.
No, it's all the fight. This is the pre-Tyson fight. It's been up for like 7 days straight. We talk about the pre-earnings run here. Money Mitch, we talk these pre-earnings runs. Well, this is a pre-event run. And
actually breaking a channel. That's the other thing that you see there on that chart. It was stuck in a channel, kept coming back to the support. Now it's on the top end of that channel and actually breaking away from it. The top end would have been around the 800 and it broke out from that 800. Yeah. You could see it up there almost to the 850. And that was a breakout of the channel. So definitely ran into that earnings. And the only thing that I would say about that fight is if Tyson wins, it's in 60 seconds.
It would be
opening 60 seconds. Yeah. He finds a little bit of an opening and uses all his energy in 30 seconds. Bomb, barrages Paul, and then he can't handle it.
If they had the normal size gloves, that would have been possible. They took that possibility away, and that's why it's a slam dunk that Jake Paul wins this. And I'm sorry to be the bearer of bad news, but that's it. I'm going to go to the background here. You guys can talk Netflix. You guys can talk Buffett. It's the take the money and run market here. I will be hanging out, though, in the background here because I still have trades to get out of. But I got to get some rest here. I just want to say hi to my buddy Money Mitch. So I will be back sometime in the show. If you guys say something I don't like, I might just come in and rant. So I will be back out. Watch it.
That is this Netflix chart is perhaps one of the most bearish looking charts I've ever seen in my entire life. No, by the bottom of the page. Okay, all right, enough. I didn't think that would go a whole 10 minutes, but I'd just been thinking about it and wanted to get
It's a
just
big
that
day.
to my
Well,
mind.
wait,
It is.
one more thing before we move on for Netflix, because if you are buying it because of this fight or whatever it is, just in terms of live sports, Netflix also this year for the very first time has the exclusive rights to NFL games on Christmas. So if, people didn't buy it for the fight, there's a lot of Americans out there that will buy it for the football game on Christmas coming up a month after that. So Netflix is making sure that this isn't just a one-off event.
They're
in
kicking butt.
terms of,
They're kicking butt.
yeah, I mean, so, and the last thing before we move on from this, did you guys watch when Tyson fought in 2020? It was against Roy Jones Jr.?
Yeah,
No,
I did watch
I
that
did
one.
not.
That was a terrible fight to watch. And that was Mike Tyson looked very old in that fight. And that was 4 years ago.
Some people say he didn't want to knock him out, though. He gave some good body shots. That's how he wins. Let's be honest. He can take him down. The only way he's going to take him down, I think it's not a headshot. It's a body shot. Let's be honest. That's what can take big guys down is those you take away their breathing, then you can do a little bit better. Let's
Right, one thing. Oh, since we're going. The only way a 61-year-old person is gonna beat a sub-30 person on Netflix will be me swimming against AB in a 50-yard freestyle.
I want to see it.
What do you got that in, Joel, right now? Like 25 seconds?
I could go 25 plus right now.
I'll have to do some. See, because when I go swimming, I do a nice mile. I swim 72 laps. It usually takes me about 35 minutes. I'm just in there for cardio. I'm not doing sprints, but let me practice a little bit and we can do it.
Practice.
All right.
All right, go. Stocks before we lose our crowd.
All right. So with the fight, I don't know who's going to win. Whoever loses might need to go to Ulta Beauty, get touched up a little bit, get some makeup on, fix their black eye. And we're talking about Ulta this morning because our man Warren Buffett bombed out of the position after only a few months. So Warren Buffett created a stake in Ulta about 4 months ago and is now completely or mostly out of the position. So cut its position in the stake here. So Ulta trading. How much are we down right now, Joel?
We're down 18 and a quarter. I'll just do a quick. Just one fundamental comment, technical comment, and Mitch, whatever you want to make. This isn't Warren. This is someone else pulling the trigger on this. They probably accumulated here on the gap, down in this area, got the gap up, and they just, Warren. I don't know. They flipped it. That's all I can say. I don't think it's a Warren move. I'm not rushing out to buy this stock on the dip, but if I was short, I'd try and bring it in off this news, unexpected news. What do you say, Mitch?
Yeah, this was stuck in a long inverse head and shoulders pattern. Looked a lot like Google's chart, and then now it's kind of shaking that, right? So a lot of bulls were watching for a 400 run. It got close there, right? On the Thursday, the 7th, it got to 395. And now I think some of those bulls that were like, well, Warren has this. And I can't blame them because I was thinking maybe a holiday run for Ulta coming up. So definitely I think some bulls got in there and now they're caught on this down news.
All right, we'll keep it ticking here. Should we go to some earnings reports?
Why don't we stick with the orange? Come on, the other Warren stuff here. Come on now. Look, he did some buying. Come on. Domino's Pizza. Oh, whoa.
Warren likes his pepperonis as much as his profit. That's what happened there.
518. No way. Mitch, are you seeing that? Are you seeing the 518 print, or am I just hallucinating?
No, it did get up there, man. It was a quick one, but it got up there.
So Buffett is Berkshire announced a $549 million investment in Domino's Pizza. Someone in the chat do the math for us there. How many pizza slices can you buy for $549 million? So Buffett, this was one of the stocks that he bought. Of course, he sold more Ulta, sold more Apple. There is one more stock he bought as well. But we'll stay on here for a little bit because I'm curious, again, just to get your guys' views here on Domino's Pizza, which, by the way, fun fact, for a while was one of the best performing stocks in the market. For a 20-year period, Domino's Pizza actually outpaced Apple, Microsoft, and basically any other big tech company that you can name. So Domino's been on a, if you bought it 20 years ago, you're happy.
I mean, you're not going to see that high. That was the most ridiculous high I think I've ever seen. I think right now, I would say hold a 460 bid. You had a pair of tops at 462 in the upper, let's say 463. You get above 463, you got a little gap fill here. You got to get to 472.50. But man, you missed the high. That was such an overreaction. And I wouldn't have a bid out on this stock and won't see it today. But 441.09, that was the top of the range. That's $20 away here for Domino's Pizza.
This will be interesting, right? I mean, it's Domino's Pizza, but I don't know how much more it's going to run there. The only thing that I would say is that the last time I ordered Domino's Pizza, I realized how much their price had jumped. And before you used to get a pizza for like $5-6. Now you're ordering a $20 pizza every time.
Well, if you would have asked like 10-year-old Aaron, hey, what do you want to invest in? He would have said pizza and pool parties. And I think Warren right now is, he's thinking about what's fun. And it's fun to, go to the pool, eat some pizza. The other stock he added was Pool Corp, ticker Pool, which is also up about 5.5% this morning. And I don't have the exact, let's see, new stake in Pool Corp with 400,000 shares worth 152 million. So a little bit of a smaller position, about a third of the position that he bought in Domino's Pizza. But Pool getting a bounce here after the nice Warren ad here. I mean, you're looking at like a forward PE of 29, price to sales of 2.5. So it's not as cheap necessarily as you would expect maybe for Warren coming in, but it's certainly not an extended valuation by too much. But Warren, again, coming in here, making some purchases. Feels like we're talking about Warren making additions for the first time in a while.
Mitch, I'll let you do the comment first, and then I got a Money Mitch test. I got a Money Mitch test coming up here.
Yeah, so Pool is an interesting one here. I like the monthlies through that 400. You got monthlies all on the same level here, 377s, kind of 383s. They're all in that same area. Now you start looking to see if you can just have a good day. With the Warren support here and that mention, I think that's exactly the type of news that you needed to get this going. Now I'd be looking to see if you take out that pre-market high. That's 388. It's a little bit ways away from here, but if it gets into the 390s, starts to close above 390s, yeah, everyone's going to look at this chart and be like, yeah, that's pretty bullish.
I'm going to give you an A+ on that one, Money Mitch. You knew all those years working with me. You knew what I was looking at. I mean, not one, not two, not three, basically 5 monthly highs in the same area. I actually looked at this chart the other day, just curious to see how it participated in the rally. That super extra major resistance, you did pop through it in the pre-market. But we'll see what happens in the regular session. But if you want another major leg up higher, and I'm looking just a couple more days, you got to establish a bid at those levels, not just, rip to 388 and 378. Let the bulls make them stand above the resistance. So great job on that, Mitch.
I like this chart better than Domino's. I'll just say that right off the top.
Yeah.
What if people are eating too much Domino's, drinking too much Coke, going to Dairy Queen, and then they don't want to go to the pool anymore because they've, gained a few pounds?
Oh,
they always want to go to the pool, man. You gotta
Planet Fitness, man.
Okay, that's the next one he's gonna buy. He's gonna buy all these stocks and then buy a gym stock to counteract all of them. All right, let's keep it ticking here. Let's go to STS here. Sorry, Joel, you put this one in the chat. Which one are we trying to go to here?
Oh, this is just we were talking about take the money and run. That was the team from yesterday. Dennis was talking about that, and I mean, just a lot of these stocks here. ASTS that came off. Had a good day. POTUS had above 30. That lunar sale that Dennis made yesterday.
Wow.
Oh my gosh, he made
That's
that.
a great
He
one.
made that in a 14 handle. Kava, boom, just coming down to earth too, down another $1.34. So just kind of like the way Orn, dumped the Ulta there. Man, there's been some quick profits just evaporating quickly. So I just wanted to mention that the Steve Miller Band here. Take the money and run.
Yeah, let's give ASTS's earnings here real quick, which is down, stock down about 10% this morning. So the company reported an EPS, a loss of $1.10 that missed the estimate by 90 cents. Revenue of 1.1 million, which beat by 100,000. So, the EPS lost there, but then you did beat there on revenue. I'm not seeing anything on guidance, but this is a small, they're only doing $1.1 million in revenue in a quarter. Stock closed down about 4% yesterday, down another 10% today. So just in a couple days time, this stock has gone from about, $28 down to $24. So nice little haircut here on ASTS.
Mitch, I'll throw this one to you. I mean, this is I think this is a tough chart. You're way off the pre-market low into 21 handle, 2166. I would say, if anything, I would just look at the bottom of yesterday's range as resistance, 2637, but that's $2 away. What's your take, Money Mitch?
Well, ASTS just made a deal with New Glenn. At least that new rocket, right? That's going to be coming out. So that's going to be something to watch. I know I'll be watching that. That's literally right in my backyard. I'll be able to see that New Glenn rocket take off. So looking towards that, that's at the end of November. That could affect this stock. But what I think also you got to watch for is that this stock has had some really, really good partnerships. That's where they've established themselves. Now I think investors are looking for pullbacks, right? So I think you've seen this $20 show up multiple times. If that gives up, yeah, you got to go. But I'll give you one more that was moving yesterday, and it's also in the satellite space. But just to mention a relationship that maybe could be kind of showing up here is Black Sky Technology. That's BKSY. It's an $8 ticker, but definitely getting the volume yesterday. I could see that moving. And I take a look at some of these together, right? I also look at SATS, which is SATS, EchoStar. So those are names to maybe keep and watch to see if some of these satellite plays are just getting the lift.
What was SATS?
Yes,
Okay.
SATS. That's EchoStar.
Okay. What was there another one that you liked a while ago? It was a SPAC, maybe that Eminent.
Yeah, I mean, the one that we just that one is a SPAC. ASTS is a SPAC, right? I mean, that came from the SPAC days. So that's not that. There was some good SPACs. There was some good ones. It was very few.
Oclo.
Very few. But yeah,
all right. Well, if you look
ones.
at the overall market this morning, you see it's in the red. You try to figure out what's weak. What's weak a little bit this morning? Semiconductors, and we did have some earnings in this space. Applied Materials reported earnings yesterday after the close. Let me go ahead and give y'all those numbers. Applied Materials reported an EPS of $2.32. That beat the $2.19 estimate. Sales came in at a right above $7 billion, which beat the $6.95 billion estimate. So slight beat there on sales. They see full year 2025 revenue, 6.75 billion to 7.5 billion, adjusted EPS of $2.11 to $2.47. And so I've said it before, I'll say it again. A semiconductor company in this environment, a beat and a raise isn't necessarily enough. You have to beat by a lot and raise by a lot, just because the bar is so high for these semiconductor companies. So you are seeing the stock down despite the double beat. We're down about $16.50 or 9% this morning. Dragging some other semiconductors names down with it. Of course, Applied Materials is more in the manufacturing space of them. So if you go to an ASML, down about 1%, NVIDIA is down about 0.8%. Let's see, AMD down about 0.9%. So nothing's down huge, but Applied Material is down about 9% here.
Yeah, this one's going to be interesting. I think what you got to continue to watch, and this happened exactly in 2016, is that at first, yes, we got that Trump lift, but what started to struggle? It was tech that started to struggle. So the NASDAQ started to underperform on the second week, and a lot of this was companies like even Apple, Google, and Amazon. Of course, we're all facing headwinds. And I think that you're starting to see some of that really start to come in. So technology is not getting the love that it expected and starting to take a turnaround.
One number. Oh, you got a step down seller here. Oh man, people are just puking. And I wouldn't have a bid out there until 164.83. That's going to your monthlies. That was your February low. $5 away. I mean, it's a 2-star, maybe a 2.5-star. It's all I can give you. And like, I mean, this just someone's just yakking here. So keep an eye on that. Maybe if you really want it, go 165 or 165.25 because there's going to be some sell stops here off the open. Once again, if you don't get down to that, you'll flush off the open. Maybe you only go down a buck or two, come back out through the open, then you may have to buy into a rally. But that's the only number I have for you there in AMAT. AMAT goes splat.
Alex, Lamb Research is probably your closest peer to AMAT, which is down about 4% this morning. So LRCX, I was trying to think off the top of my head. I mean, ASML, for whatever reason, isn't down as much, but I think they do kind of something.
They had
similar.
earnings yesterday, I think, and they had a decent day. So
there you go. You're so smart, Joel. You know, sometimes I overlook these things, but you always remind me what's going on. All right, let's go to Alcoa real quick. Ticker AA here, up 7% this morning. ING Group announced or I guess it was in their filings, a stake of 264,000 shares of Alcoa. So at, $44 a share, that's a decent chunk of change there. You're talking about over 200,000 shares. Big purchase there. Stock is trading higher by about 7% this morning.
Also, China canceled some tax incentives on metals exports. So you got a big move here. Dennis talked about buying the dip yesterday here and some of the metal stocks. So Alcoa getting a pop off the pre-market high, 45.29. You're off that by, right now you're trading at 44. Kind of 44 to 46, man. I think anything over, I like to see this hold 43 today. That's halfway back of the move. So that would also you are getting a gap fill if you feel like you got jammed when it got over 46. And NUE, Dennis was talking about buying the dip on this one. That's getting it. I like to see just a couple of days of stabilization. STLD, which I've owned for a long time. I'm not sure how this is reacting to it. But, oh boy, a little bit of a haircut there. There's a look at steel stocks. Anything sticking out to you, Mitch, in the steel stocks?
Not steel stocks, but what's on the radar, right? Everyone's looking to see if we get any type of inflation spike. So keep watching these basic materials, right? See if there's any spike there that will cause some concern. Of course, everyone's looking for it. Now, I think we're going to get some retail number here at 8:30, right? So keep your eyes on that action here. It's about to hit here. So I'm going to be hopping out, though, with this number, guys. I did want to tell you guys, keep an eye out for some early Black Friday stocks. So that's what I'm starting to look out for. Next week will be that week prior to Black Friday, right? That's when I start to look to see if these stocks make a run. So you can see the XRTs already propping up a little bit. You can keep your eyes on different stocks. I have seen different ones making the move already, like Victoria's Secret continuing to push to the upside. But I'm looking for names like Best Buy. Maybe to see if Amazon can get a lift. I already see Macy's propping up this morning and Dillard's, right? So those are names that will be kind of doing those Black Friday sales. And I think that you can look to see if maybe some apparel gets the lift. We were all concerned about apparel, but with the situation that's out there, why not maybe A&F get a lift or something like that that's been sideways for some time. So those are names that I'd watch. GameStop is on there also. It's in the XRT, and that's why the XRT is also looking good too. Why would GameStop be moving? Holiday action coming up. Of course, Black Friday sales. So they're maybe trying to push it into that with, of course, knowing that they'll get maybe some supported positive catalyst when that comes.
All right, so Mitch, excellent commentary. And then I just want to let you go. Look at the chart. We had Mish Schneider on October 28th, and this is the Mish range. Keep an eye on that $80 level in the XRT. Not one, not two. I'd say there's like 8 monthly highs there. That was a number Mish gave us back on October 28th. very closely following your analysis there, Mitch. So
Yep.
8:30, we'll let you go, money. I'll give you a call. You got to bring the kids back next time. Retail sales number. What do you have for me, AB?
Still waiting for these numbers to come in. Should be any second here. We do have the New York Empire State Manufacturing Index came in at 31.2 versus the negative 0.3 estimate. U.S. retail sales month over month came in at 0.4% versus 0.3%. So one tick hot. It was 0.8% previously. So it did go down it did go down from the previous month. U.S. export price index for October was 0.8% versus the negative 0.1% estimate. U.S. import price index month over month, 0.3% versus the negative 0.1%, 0.4% prior. Core retail sales came in at 0.1% versus the 0.3% estimate. So that was actually lower than expected, the core retail sales there. So kind of a mixed bag for this economic data here this morning. How are the old?
We got a little bit of a pop here, and as you look at that upper right chart here, I mean, this is tough. Like I can't come out and say this morning that, man, that low at 59, 30, 75, what a great level. That coincides with nothing. But when I see a big range like this in the morning, what I like to look at, big down range or a big up range, is I like to see if the market can get back half of the move. And half of that move right now would be 52.50. I calculated that right before we got on. That pop only went to 53.5. I wish I would have been out there at 52.5, but that's your level for the day. If you want the market to get back, get green, test the low of yesterday's session for a gap fill, at least on the day charts. That's what I'm looking at here in the S&Ps and the retail. I mean, let's just keep an eye. Let's not miss this trade here in the XRT if it bumps through 80.
So I went to the mall the other night, Joel, for the first time in a while, and I have some thoughts on it. So I went to Somerset. First of all, their Christmas decorations already are beautiful. They went like all out. It's incredible what they did. It was dead though. I went on Wednesday night. No one was there at the mall at all. It was crazy. Easy to find parking. Macy's was the food court, everything. My other thought on it, going to the mall is not as fun when you're unemployed. You know, and when you're unemployed, going to the mall, it's not as because you're looking at everything and you're like, man, like, all right, when I get a job again, I'm going to come back and buy that. But by the time you get that, it's probably going to come back and what you were looking at was gone. But all right, we do have our first guest of the. Well, actually, no. Mitch was our first guest of the day. We got our second special guest today.
Mitch, you can't really consider him a guest. He's kind of like he's a guest host. Now, CC is like the guest and the options guru, and that's who we're going to bring on now.
Yep, we are going to bring on our man, CC Lagator, of course, at expiration day. Always good to catch up with CC from Options AI. Let's give him that special pre-market prep welcome and catch up with CC when we get back.
CC Lagator. I love saying that name. CC. What's a CC stand for?
Calvin Christopher.
Calvin.
Wow,
Christopher.
Calvin.
Yeah.
It's my two grandfathers. And I think legend goes, so I was raised Catholic, and like a priest told my mom that I couldn't go by Calvin. So CC.
What is CC Sabathia? What do you know what that
I don't know what that. Yeah, I don't know what that stands for, actually. Yeah.
Okay, we'll have Aaron check that out. Okay, so let's get to the options. And they pumped up the VIX. The VIX before the election, man. The VIX was elevated. The market was quiet. How did those elevated VIX buyers do? And perhaps what are we running up here as far as resistance goes in the market?
Yeah, it sort of played out, exactly how one would think it played, for it to play out. It was, volatility went up into the election. I think most of that volatility, I would say, was, if it had been a tight, unresolved election, I would say, right? And that week was very odd because you had the FOMC, But most of the volatility, if you looked at it, even because you get to now focus in on, where are these options? And they were, with daily expiries, it was really that day after the election, especially in like TLT and all, right? So anyway, I think a lot of the volatility in the equity implied vol options going into the election were, what if this is a mess, right? What if we don't know for weeks or something like that, right? Once it became sort of clear and there was a clear winner the next day, equities rallied and all. But that TLT vol, that bond market volatility, which we can get to in a little bit, because I think it's, it's a very important thing to be watching here right now for the market. That TLT move, those TLT moves since the election were pretty massive, right? And TLT, and I'm just using TLT as a proxy for the entire bond market, that volatility was really high going into that day after the election as well, right? So we got this reaction, a relief rally, whoever had won, you were going to get a certain amount of reaction, like for certain parts of the market and things like that. So we get this rally. Then we really kind of hit into exactly where, if you had, most people were buying options for protection and things. If you were along the market and you were selling options to the upside, it was going to be right at 6,000 SPX, right? It was the obvious spot to be like selling call. If you're a hedge fund, if you're an institution and you're laying off some premium, you're selling up near that 6,000 level, right? And that's exactly where the market got to in SPX. And if you had asked me 2 days ago, I would have been like 100% we're going to pin there on Friday, right? We still could if the market turned around today. But what it served as instead was basically like a call wall. It was the market got up there, the sort of the post-election rally felt like it had kind of, run its course, like the initial reaction. We're going to regroup. There's could be some consolidation. It happened right at that spot where all of those buyers of options had become sellers of options, right? And that's exactly sort of what transpired over the last 2 days, I would say.
So, Cece, I mean, before the election, despite the market being at all-time highs, we saw the VIX creep higher, which is, obviously not what you're used to seeing while stocks are going up, but we had this upcoming election. It was supposed to be very close. And, obviously the election, we knew the day after who won. And, the VIX has come down since then. What could possibly create the VIX to spike up again before the end of the year? I mean, could it be a return of like the yen carry trade? Like what could possibly create this VIX to start going higher before the end of the year?
Yeah, that's a good question because very few things, basically. So the setup right now is even if you saw pullbacks, like we are potentially seeing the last 2 days, right? And it's just like a little bit of a pullback from those highs. Unless that turns ugly, you are going to continue to see volatility go lower and lower and lower as we get into year end. And it's just a seasonality thing. It's, maybe if there starts to be uncertainty about that December Fed meeting, and we have sort of the last thing coming up is the NVIDIA earnings next week. I would say it's the last thing kind of on that calendar of the last couple of weeks of busy things. So the tendency of the market right now is for this VIX, which is, I think, 14.5, 15 or something this morning. It should be, if all things go, according to how they generally go through Thanksgiving and into Christmas and New Year's, it would be in the low teens. It would be 13, right? It would be 12.5 or something by year end. What would upset that, I would say, is I just keep pulling up that TLT chart and I'm looking at that 90 level, right? And if the sort of that what's going on in the background is the bond market is, the bond market has not reacted well to either the election or, with the inflation numbers kind of like, being sticky, that it's not like following through. Whatever it is, the bond market is showing some warning signs right here. And so if I had to put my finger on one, and I'm not saying that's going to happen, right? I'm just saying if you had to wake up in the morning and check one thing and how the day was going to go, I would be looking at that TLT chart. And if last week, it had that reaction after the election, and then it kind of bounced up. I think it went up like 2-3 points or something last week. And stocks were trying, it gave stocks a reason to continue that rally. Now it's turned back lower. And I think everybody's kind of watching the bond market right now, because if yields spike, a lot of this bull market story starts to get a little weaker, right? The assumption was we were going to have a Fed lowering rates, not aggressively, but a Fed lowering rates over the next 6 months. Inflation, staying down, at like the near 2%, 2.5% or something like that. If any of that backdrop changes, it really complicates the bull story. So I would say I would be watching that. And if that happened, if TLT all of a sudden you saw it at 85 or whatever, and the equity market was following through and you were getting like a pullback that was more like 5% and not 2%, that would be the one thing that would send the VIX to the high teens, maybe.
And I mean, how quickly, because the market has just been remarkably strong the past year. I mean, I think the S&P 500, despite the recent pullback, is up 35% over the last year. Like, do you see a scenario where even maybe not without a major event, you start seeing people just booking some profits before the end of the year, and then it becomes kind of this like loop of people selling and like a 5-10% pullback? Or do you think that would be almost welcomed in a way because people know, okay, look, we can't just go up 35% every year forever. A little correction here wouldn't be the worst thing in the world.
Yeah, there's part of that which is like a personal opinion, which is no, I don't think that's going to happen. I think you will see little pullbacks and you'll see sector pullbacks, right? Like last time I was on, we were talking about the signs of kind of a blow off top. And there were a couple of those this past week, especially in like kind of crypto world and things like that, where you start to see like kind of frenzies happen. So I think you're going to see certain sectors like top out, right? But maybe we might have even just seen it in Tesla, to be honest, right? Like that top in Tesla and that pullback, that could last a little bit. Like Tesla's that type of stock. It goes up 50%, it comes back in 25%. Like it's a crazy stock. So you might see little things like that. I think in the market in general, here's the option spin to that, is once you've had, there's no better recipe for a slow grind higher than a period of high implied volatility in the option market, where you had a VIX that was 23 or whatever into the election. Sometimes you get it after a sell-off, which is like 35. That initial move lower in volatility is when you see that like sort of parabolic move in equities. What happens after that is that slow grind where the VIX goes from 16 to 15 to 14 to 13 to 12. And what that is the market getting overloaded with people selling options. And it turns into this grind. And those days, it's basically days where the market's trying to get up 0.5%. And then when it tries to pull back, maybe it can string together, a 1.5%, 2.5% pullback, stacked up over a couple of days. But there's buyers there. And there's buyers there because of all of that market option backdrop gamma, right? And it becomes a self-fulfilling thing where it prevents those big moves, either way, right? And so the recipe, and that's the other thing I was mentioning, like what I would check in the morning. Check the VIX, right? And so right now, if you start to see the VIX, and we're getting towards Thanksgiving in 2 weeks, and that VIX is 13 or 12, that is the recipe for that entire Thanksgiving week for the market just to be up 0.5% every day, right? Like on low volume, it's just going to grind. And it's that sort of Santa Claus rally, where you're like, I can't believe stuff's still going up. And it's like, you turn around and next thing you know, the market's up 6% and it barely felt like it. That's that recipe. The flip side of that coin to be watching out for is if this, if people do start getting worried, what's going on in the bond market. I think Money Mitch brought up earlier, like the last time in 2016, tech started to get hit after Trump won, right? If you start to see stuff like that and the VIX is all of a sudden 17, it's like everything I just said, ignore it, because that's actually a much more exciting market into year end, which we get sometimes. Like sometimes, like Joel, you're old like me. Like sometimes you get exciting Decembers. Like it happened.
Yeah, I was just going to ask you about that. I mean, because there can't be any tax loss selling, right?
Right.
No one has any losses, right? I mean, I'm being facetious here because there are some stocks that got absolutely annihilated, but here you are, the end of November or mid-November. Now they talk about the institutions that they do their trimming and their tax end selling a little bit earlier here, but set us up. We got a month and a half here, Santa Claus rally, Turkey Day, Black Friday and stuff. I mean, just an incredible run in the market. Still a lot of uncertainty, still a unstable geopolitical situation. Talk about setups, options, stocks into the end of the year.
Yeah. So basically, you are in a low vol environment, and you're unlikely to get big, huge moves like we saw over the last 2 weeks anymore, right? I mean, you're going to get them in some stocks, most likely, I'm saying. So what you should be looking for is if you are in a stock that is up a lot. My buddy was showing me Hut, which is like one of those like riots and Huts and all the crypto. He was asking me like what to do and something like that. He's actually long the stock, and I was looking at options, and I was finding it really hard to like figure out like a hedge that wasn't like wasting a ton of money. I was like, this is the type of thing I don't know where it's going to go. Like picking tops, I'm really good at like the sentiment of a bottom. Like you can tell that, CNBC had their, prime time markets in turmoil show the night before, you get in there in the morning, everybody's puking everything. Like bottoms are really easy to spot. Tops are tough, man. So, when I'm looking at a chart like that, I'm like, I don't know, it could be already overdone. It could be going to 50. I have no idea. And then I start looking at options for them, and I'm like, hedges are expensive. I don't know if you want to start wasting money.
Explain that. Why that? I mean, is it just the bid ask of they're not giving you enough on the calls? They want too much on the puts. You lose your butt on a strangle or straddle. Explain that. What's your criteria?
Yeah, so this one's kind of weird, and it's gonna be a little bit. I don't know. It's not even that nerdy for the audience in the show. So basically, what happens in these kind of parabolic move stocks, right? Like meme-ish stocks, or stocks that are making like a move, even like what Tesla, even like a big cap a company could potentially do it, but it's a lot of times mostly these smaller ones. In typical markets, if Microsoft goes higher, the option volatility goes down, right? When Microsoft goes lower, the option volatility goes higher. That's the exact opposite thing, that happens in a stock like Hut, for example, right? When that thing starts going parabolic, the option volatility actually goes higher. And what it is all of those straddles, all of those upside calls that people that people are reaching to for the upside, it's pushing volatility higher, actually. And so when you get those parabolic moves, you turn around and you're like, all right, I'm long this stock, I want to hedge it. And you look at the options prices and you're like, oh my God, it's so expensive. Volatility wise, that if I bought a put and the stock pulled back, I might actually lose money on that put, because as it pulls back, volatility will come in. It's the exact it's almost like a commodity option chain, right? Where it's like it goes up to the upside, it crashes to the upside, and it pulls back, it grinds lower, right? So anyway, what I would recommend instead of like looking for a hedge or something like that is I would say start to look for like stock replacement strategies, right? Using the options. And there's a few things that you can do, but one of them is like a poor man's covered call. I don't know if anybody's heard that term. So a covered call is like you're selling upside calls against your stock. A poor man's version of that is you replace the stock with a slightly in the money option. Maybe it's 80 deltas or 75 deltas or 90 deltas or something like that. And then you start selling upside calls, which are pumped against that. And what happens if the stock had just gone from 15 to 50 and you're doing the 30 strike, you're hedged out, right? If the stock totally craps out tomorrow and goes below 30, you're no longer losing, you're just risking the price of that call now, not the whole stock. And so that's one strategy I would look at too in a stock like that, is just replace it with a deep in the money call and start selling calls against that deep in the money call, right? If that makes sense. As far as like, looking out on the calendar, on the options calendar, the VIX right now, or at least when I was looking a little bit yesterday, I was looking out, beyond the new year and beyond the inauguration, that sort of thing. That February to March is seasonally pretty volatile time in the market, right? And the VIX, which is 14 right now, I was looking out at SPY and SPX options in January and February. They're already at like 13 and 14 IV, which you can just compare. So imagine when you see a low VIX, I always start to go like calendar. I go out on the calendar and I start hunting for where somebody's made a mistake, where it's gotten too low, right? And it's not that someone's made a mistake. It's just the market overreacts, right? And so if I was looking to do anything, even to the upside or downside, like even if this was like a bullish breakout play, if you go out to January and February, you're basically, it's like buying options as if the VIX was 13 or 14, and you've got 4 months for it to happen, for anything to happen, whatever your positioning is, right? So if I was looking to do a breakout play, if I was looking to do IWM type upside breakout trades, if I was looking to hedge a tech pullback, hedge Qs, or hedge any individual stocks, I'd be starting to look out to that January and February and getting it before it's gone, because that will not stay that way. By the time we're in February, there will have been a market something that got the VIX back up towards 20, right? And so you don't want to miss that opportunity. And so not to do it tomorrow or today, you can't trade tomorrow, not to do it today, but you would start to look at like, once you're, once the VIX has been 13 for a week, start to look out, all right, where am I going to do this? I'm not going to do it this week because I'm not expecting a massive pullback this week. Oh, wait, January and February vol is 13. I'm going to go out and do some positioning out there.
I have, CC, I have just a kind of a general question before we wrap up here. But like psychologically, why does it feel like the market could be at all-time highs, that S&P 500 could be up 10 days in a row, and the first day we get a little pullback, like I'll look at my portfolio and be like, oh my, and like freak out about it and think, oh, this is the end, this is the top. Like, why is that? Because we know as traders, investors, you need to have some pullbacks at times to be healthy. But why does every little hiccup feel like, oh, this could be the top, this is bad? And then, usually if you just stay strong and hold in there, you're going to be fine. Yeah.
No, that's a deep question there, Aaron.
Okay.
I think it has a lot. It's really weird because it's funny. I saw the same thing yesterday. Like I was like looking through Twitter and I was like, guys, the market's down 1%. Like what's everybody talking about? Like this is all over, right? And part of it is, I would say, and Joel, Joel's a good person to ask about this, but watching every tick of a market can really mess with your head, right? And when you're like a future, I don't know how you do it, Joel, because like when you're like a futures trader or whatever, like a 10-point move can feel like the end of the world, right? If it comes out of nowhere at all. So I would say sometimes you've just got to, like in a day like yesterday, when you start to feel that internally, or it's like something going on overall, and like you're on, social media and everybody's, like, what, the market, the rally's over. Just literally back up the charts, right? And be like, oh, yeah, I think, this is not. So it's something psychological about watching every tick, I would say.
Yeah, I would. That's like as far as the long-term portfolio. I mean, the way these guys pull it up and look at it all the time. I mean, I just try not to do it. You're right. I mean, the movements like after like 10 o'clock sometimes, and also in that last hour, I just try to. I mean, I really try to ignore those moves. They're so whippy. 5, 10, 15. I find the moves overnight being a little bit smoother. But before we let you go, got a very important question for you. Two-part question.
Ooh.
Are you watching the Tyson Paul fight, and who do you think is going to win?
Well, no, what's funny is I wasn't even aware of its existence until like 2 days ago. So that shows you how good their hype has been into the match. And now all of a sudden it's like, I'm Googling it last night. I'm like, how does Tyson look? Right. So the buildup and the hype has been incredible for it. I think it's going to be a huge hit for Netflix, right? There's nothing else on tonight except for like some college football, I assume. So it's going to be a huge thing for Netflix. Tyson is what? He's late 50s?
58.
And how old's the kid? He's 20s, or is he 30 yet?
Is it, what's he,
Let's see.
35?
Jake Paul is 27 years old.
Oh,
27.
man.
Yeah. I mean, I don't know. I'll put it this way. I'm 51, and I grew up, like when I was little, it was Tyson. I mean, he was the dude, right? So I'm going to be rooting for Tyson. But yeah, I don't know. 57. Well, I got a question for you. When George Foreman came back and retook the title, how old was he, Joel? Do you remember? Was he 50?
That's a good question.
Yeah.
I don't think he was in his 50s. Wasn't he in his late 40s? I think. I
remember at the time it seemed preposterous how old he was, but now I can't remember. It was 42.
Yeah.
Somebody said.
Yeah. Wow.
That's totally different. That's like
believe me, I know that. Okay, we've been on the line.
Tom Brady played until his 45 or something like that. So
I got the answer for you. CC. He came back at 38 and won the title at 45. That is not 58. That is not 58 years old.
Totally. But do you remember
48, and I feel like 88 today. Yeah. I don't think he's got a chance. I'm taking all my. I've never been so convicted on a call in my life. Jake Paul, he's like Portnoy said it too. He's minus 200. Portnoy said he should be minus 10,000.
Yeah,
unless it's completely rigged. To Joel's point, that they would want boxing to get back, some of the luster here from the UFC.
How awesome, Dennis? How awesome?
There's no way.
How awesome would it be, though?
I would love it. I'm the hugest Tyson fan, like huge. I mean,
be like, that's what we're talking about.
Before I cancel my Disney Plus subscription, I watched that entire Tyson thing that they had. They had like the Tyson story from when he was a kid and how he became a boxer, and that was absolutely fascinating. Like the day he became just a killer, just a cold blood killer. Yeah.
Okay, CC.
Okay, I'm going back to the background.
Yeah, go blow your nose. CC Lagator, Options AI, joining us, and boy, I can't wait. Next month, triple quad witch. Let's see here, the last quad witch of the year. I'm going to mark the date in my calendar right now, OCC. So it's a little bit early because the first Friday is the 6th, the 13th, the 20th. That's when we'll have CC back on. CC, always a pleasure giving us some education here. And we'll be talking to you next month. Thank you very much for coming on.
Awesome. Great to see you guys.
All righty, y'all. We've got a couple minutes before our next guest comes in. There is another stock that, I'm not taking a position in yet. It's starting to get on the AB dumpster dive watch list, though. This is for sure a dumpster dive stock. We're talking about Moderna here, mRNA. Closed down about 6% yesterday, now down below $40. I mean, got to be below $40 for the first time in years. This is, of course, coming after, RFK was announced as I don't know what the exact title is, head of the health department, whatever it is. He's obviously
HHS, Health and Human Services.
Health and Human Services. He's obviously not the biggest fan of vaccines. Moderna makes vaccines. So you can see, why this might not be great news for Moderna here. So the reason it's even on my AB dumpster dive watch list is because when I've talked to people in the biotech space, they all basically say like what Moderna is doing technology-wise, just wait 20 years. So like if you're any type of short-term trader, whether that be day trading, swing trading, whatever, this does not apply to you. But I might buy a couple Moderna shares and just hold it for 10, 15, 20 years, because again, from people that know more than me in this space, say some of the things they're doing with this, mRNA, like technology is actually pretty cool and has the potential to solve or help alleviate a bunch of different illnesses. I know they're working on an HIV one after the COVID thing. So interesting story, but right now, I mean, it's just so down in the dumps. I don't think you can touch it yet.
Ooh. Yeah, I mean, it's trading down off the news here. Gosh, we're gonna have to. I'm definitely bringing on Jim Tizzoni next week. He gave us the short like around 90. I don't know if he's still in it. Boy, oh boy, you're going back on the weeklies. The next, I mean, I do see 3 monthly lows at 39. Or no, weekly. Oh no, that's the wrong chart. Wrong chart. I got nothing for you here. Let me go to the monthlies here. Boom, boom. Man, you have to go down so low. I got nothing for you, folks. I don't know where to buy this stock. Keep an eye on the pre-market low. So there you go. And
Martin's, some of these stocks, these are in the AB dumpster dive watch list. Lulu was in there, but Lulu, I think, has now come out of the dumpster a little bit here. So I think Lulu is disqualified from my dumpster dive stocks. We do have, our next special guest just popped in backstage. It is 9 a.m. So why don't we bring on our next guest, Joel?
Okie dokie.
All right, we've got Cameron Dawson, of course, coming over from New Edge Wealth. Let's go ahead and give Cameron Dawson our very special pre-market prep welcome and catch up with Cameron when we get back.
Hey, Cameron Dawson, Chief Investment Officer, New Edge Wealth. How you doing on this? Looks like it'll be a down day and a down week. How you doing today?
I'm doing wonderfully. I like the new term extra special guest, not just special guest, extra.
Okay, so I'm gonna throw a tough one at you, and then we're gonna go to the slides. Okay, I'm bullish. My portfolio, my long-term portfolio, I try not to mess with it too much. I'm a long-time bull. Okay, but what is there a chance post-election euphoria, all these big changes coming in the administration? What are the chances that those levels that we hit last week in the S&P stand up for a really long time? Now, I'm not talking about crashing and burning or a big bear market, but what about that scenario?
I mean, when you say if there's a chance, I keep thinking Dumb and Dumber. So you're telling me there's a chance. It is very possible, we think, that 2025 looks like a year like 2015 or 2018, which is just to say that we get a sideways kind of choppy market. It doesn't mean that we couldn't have, let's say, a rally to start the year and then a correction similar to what we had in 18. Remember, we had a melt up at the beginning of 18 and then that Volmageddon kind of flash crash. But we think that forward returns in 25 likely are lower. And this is something that it's not too much of a reach to say, are likely lower than what we've experienced the last 2 years. So when you start going down the list of where positioning is, where sentiment is, where valuations are, where earnings expectations are, they're all very elevated and very lofty. It doesn't mean that they can't go higher. We are in an environment where we don't think we have a non-zero chance. You're 1 in a million kind of non-zero chance of us having a melt up potentially. You're throwing so much potential fiscal stimulus, monetary stimulus at this economy, but we think that we should lower our standards for forward returns in 2025, which is just to say have an expectation for higher volatility, more sideways chop as we grow into some of these lofty valuations and we digest the fact that earnings estimates are already pretty elevated.
Got it. And Cameron, we do have your slides up here, so I can pull them up and you just direct me where you want to go here. What's been top of mind for you here? Obviously, since we've last caught up, we've had a presidential election. The market hit new all-time highs. Bitcoin broke out to 90,000. We got a lot to talk about. Where do you want to start?
Yeah, I think if we jump all the way to page 11, I believe it is, this is the story of, maybe back one page, page 10. This is the story of earnings that we think is really interesting. So this is as of Monday of this week. And so obviously the market has digested a little bit and that white line has come in. But this is showing you 2025 EPS estimates in the blue line. And what you can see is that over the last 2 months, those EPS estimates have been falling. And one of the things that we have said, if we were to look at 12-month forward EPS estimates, the key reason why this market has been so resilient, so supportive of your bullish view, Joel, is simply that 12-month forward EPS estimates continue to climb, continue to move higher. But what you're starting to see here is analysts starting to raise questions about the loftiness of where estimates were for 25 at $277 a share. That's now come into 272. And I think that there is a reasonable question to ask of how much does the election potentially change the trajectory of these earnings estimates? Meaning it's unlikely we're going to get tax reform until 2026. We'll negotiate it through the course of 25. But if you're hoping for lower taxes to boost earnings, that's really more of a 2026 story. We have to contend with the questions of tariffs. Possibly that could be a weight on overall earnings growth. Not certainly something that we would ever consider to be an upside driver. You also have people throwing around the ideas of less regulation, deregulation, potentially supporting M&A, supporting more CapEx, more investment. That could be something that could be an upside driver to earnings, but really hard to quantify. Animal spirits certainly help, potentially with incremental investment. But there's really not this clear sign that we think earnings estimates need to move significantly higher because of what Washington is going to look like, which just means that if we look at this rally over the last 2 months, it has been driven by error. It's been driven by valuation expansion. And that's how we got valuations up to 22.6 times earnings at the beginning of this week, which we do think are stretched. So continue to watch this. We think if 25 estimates fall, that gets you to your scenario, Joel, where you've seen the local highs and you kind of just chop around sideways because you're not seeing the market upside necessarily driven by fundamentals.
Cameron, let's talk interest rates here for a second. I think I've kind of been behind the curve, so to speak, of, the Fed doing a half, caught everyone off guard. They go another quarter, expectations, another quarter in December, and then whatever for next year. A lot of the market rally is predicated on that. And then you got the hawkish talk yesterday. I mean, you saw the reaction in the market late in the day to Pump and Powell taking a little air out of this market. What are your expectations for interest rates in 2025, long end and short end?
Yeah, so we had been flagging that if the 10-year yield crossed above its 50-day moving average of 3.8% back a couple of months ago, that a 4% 10-year was certainly in play. And then, of course, 4.25 was in play up to the next level of resistance. Then 4.5, if you were to break above that, would certainly be in play as well. And that has played out because we think fundamentally the bond market got over its skis in expecting rate cuts. The bond market got over its skis in expecting a deterioration in economic growth. And so we've been up the camp that we think that the Fed isn't going to cut as much as the bond market expects, and that the US economy is overall more resilient than these bursts of kind of fear that we've seen over the course of the last couple of years. And we're still not making a recession call for 2025. So what we think is that if you do continue to see this resilience in data, and of course this is a month by month game, a lot can change each month. We could have a very different reaction, be talking about a very different bond market if, for example, November payrolls comes out and it's soft at the beginning of December. So we know that the bond market is going to be hypersensitive to underlying economic growth. We also have to consider at the beginning of the year two very opposing factors which could cause volatility within the 10-year Treasury yield. The first one is that we hit the deficit or the debt ceiling at the beginning of 2025. So right at the beginning in January, we hit the debt ceiling, which means that the Treasury is going to start spending down its excess cash balances through the Treasury General Account. It means that they don't issue as much debt. So maybe there's a dynamic that pulls Treasury yields lower as you're not seeing as much debt issuance. That's one opposing factor. The other opposing factor is that you have seen a seasonality with inflation over the last couple of years in the first few months of the year, which could mean that we could have some stickier, hot inflation prints to start 2025, which of course would put upward pressure on yields. So I paint a very kind of murky story where we see yields being in this wide range, of course, reacting to stronger data to the upside, weaker data to the downside. We do think, though, that the higher that yields go, the more attractive they become as a hedge to potential economic weakness. If the 2-year yield gets to about 4.5%, you're effectively saying the Fed will do no more cuts in 2025. And if you're saying the Fed will do no more cuts in 25, you're effectively saying that we have a very resilient economy throughout the entire course of 25. That becomes an interesting hedge against credit that is trading at the tightest spreads in 30 years, equities trading at very high valuations, neither of those contemplating any kind of downside recession risk. So we actually see bonds, as the yields move higher, as becoming increasingly attractive just to hedge out some of that equity and credit risk, which is being priced so much for perfection.
All right, we're on the line with Cameron Dawson. Cameron, I want to ask you, we've had a big rally in the Mag 7, right? But it's really due to one stock. And is that healthy? I mean, when you see that, when one stock does all the heavy lifting, is that like, that's not great? What do you think? Talk about Tesla and the Mag 7.
Yeah, I mean, this is so interesting because if you look at the Mag 7 index, and this is of course a snapshot as of Monday, so this looks a little bit different if we were to run it this morning. But if you broke down and kind of went through the other Mag 7 names, Microsoft, Google, Meta, Apple, they've all been lagging since the election. You have Microsoft, which has been trading below its moving averages, sort of sideways, relative performance really breaking down. And so if you look at the source of the upside post-election in the Mag 7, which has been a very dominant market driver, what you can see is that it really comes down to just Tesla. And NVIDIA has been stronger and Amazon as well, but the real big move came just from Tesla, which of course we know is incredibly idiosyncratic. So one of the things that we've been seeing is that the Mag 7, it has had this market dominance, which has resulted in a narrow market, but the Mag 7 itself is getting even more narrow, which means that you're actually seeing earnings estimates for areas like Microsoft get cut. Microsoft's earnings estimates have been trimmed lower. Apple's earnings estimates aren't going anywhere. We think that the trajectory of stocks really is going to be dependent on where you see 2025 earnings revisions go. If they are lower, then that is going to be the driver of lagging kinds of parts of the market. Whoever has earnings revisions that go higher is where we think that you'll see market leadership. It seems like a trite thing to say, but sometimes you get those things diverge. We think fundamentals, come back in. And so, the degree of narrowness is something that of course gives us pause and of course kind of makes your stomach turn a bit, because you don't want to hang your hat so much on just one stock that certainly has had a high degree of volatility.
All right, Cameron, I'm going to back up a couple of slides here and go to this RSI one. So, I mean, you said earlier you don't see a recession coming, but we're seeing a little bit of a pullback here. Do you think this is just people booking some profits with the market hitting new all-time highs? I mean, the market has been unbelievably strong the past year or so. So you can see the RSI on the overall market getting slightly into overbought territory. You think this is just a healthy pullback, or at what point do we start to become concerned?
Yeah, we do think at this point, the market has been certainly in the stance that you better darn respect its trend, and the trend has been higher since the October lows, which just has kept any kind of corrections that we've had well within the trend line. It's been well within kind of the moving averages. It's found support, and you've rallied right higher. The market did get overbought at the beginning of this week, and we triggered this overbought reading, which we said, hey, look, it's very prudent and very normal to expect some kind of digestion once you flash in that overbought territory, and that it puts in play a return to the 50-day moving average, maybe 100-day moving average. Interestingly, if we did that, it would be reversing a lot of the post-election move. We do think, though, at the end of the day, you still have strong dynamics from a seasonal perspective. When the market is as strong as it has been through the course of the year, you don't have many candidates for tax loss selling, meaning for harvesting losses, and people tend to want to delay taking gains. Why would I take a gain today and pay taxes on it in April of 25 if I wait till January to take a gain and then I get to wait until April of 26 to pay those taxes? Certainly that creates a dynamic where people are hesitant to want to recognize gains. You also have window dressing, overall performance chasing, which are important dynamics. So if we had to be betting people, we'd say, okay, we get this overbought condition, we digest, we pull back a little bit to our support levels, and then from there, maybe we see that Santa Claus rally into the end of the year because of those tax loss dynamics and performance chasing. So this is all very normal and run of the course, and of course, at the message might be different once we get into 25. You could see more tax law, you could see more gains harvesting of people now you going ahead and doing that at the same time as you'll have to contend with high valuations and stretch positioning and stretch sentiment, which just again gets us back to this notion that maybe lower your standards for 25 returns.
Cameron, the lifeblood of this market has been rotation, right? Growth versus value. And we've had divergences, IWM here, in the face of rates really maybe not going as low as people expect. You've had a real nice rally in the IWM. Just help us finish up here with the growth versus value scenario from 2016 and your outlook for the small caps if rates are going to be holding steady.
Yeah, it is for small caps, we continue to see the need to look at the earnings and as well as the price action, and that a real big reflection of the degree of underperformance of small caps has come from the fact that small caps earnings have been revised or lower so much over the course of the year. You've gone from expecting about 10% growth for small cap EPS growth to start the year to now it's being down 20%. So that huge revision down cycle is one of the reasons why we've seen these bursts of small cap outperformance, but they haven't been sustained because they have not been supported by earnings. So to your point, Joel, one of the key reasons why small cap earnings have struggled is because of high rates, because of high interest costs, and that if the Fed is in fact staying higher for longer, then a lot of the high yield debt that small caps might have raised back in 2020, 2021, where rates are so low, starting to roll off now. So we could continue to see this weight on small cap earnings from a balance sheet perspective, given those higher interest costs. Of course, there is expectations and optimism around more M&A, deregulation potentially helping this area. That's certainly something we're seeing in the regional banks. But again, it has to eventually show up in earnings. On the growth versus value question, certainly the big difference between this reaction to Trump's win and what happened in 2016 is that value had a huge run in the last 2 months of 2016. You saw financials and industrials and energy stocks all run really hot into the last 2 months of 2016. Eventually they reversed and underperformed sharply in 2017, 18, 19, most of 20, most of 21. Finally, they did better in 22. But the difference today is that you really haven't seen any leadership coming out of value in reaction to Trump's win. You have seen, yes, stronger financials, but overall, it's still a very growth dominant market. So does that stay in 25? That's probably the biggest question for 2025 is that growth versus value dynamic. And if we have a sideways choppier market, oftentimes that actually is it does correspond with periods of rotation and potentially opening your mind up to value leadership, but we're not ready to make that call yet.
All right, Cameron, I'm looking forward to your weekend update. We always like to do a musical theme. Have you been thinking about a song or a theme or an artist? Do you already have it, or you
Oh,
want
it's written. It's written.
Yeah.
So it is this is the big reveal, the preview for everybody. It's Newfound Glories, My Friends Over You. So if anybody remembers the early 2000s and had a pair of Vans and maybe some cargo shorts and some hair gel to spike up your frosted tips, this one is for you.
That's Dennis. Okay, we've been on the line with Cameron Dawson. She's the CIO of New Edge Wealth, joining us here on Pre-Market Prep. Thanks, Cameron. We'll be dialing you up again before the end of the year.
All righty, that was Cameron Dawson, of course, from New Edge Wealth. Always a pleasure to catch up with Cameron. Let's go ahead. I was just going to say,
we're leaking. We're going to take out the pre-market low. Dennis, what are you doing over there? Did you just take off the morning to sell everything?
Mute
Dennis,
trick.
with the mute trick.
I did
Cut
it.
him some slack.
Yeah, it does. Selling balances across the board. You could, they could flip. Obviously, we're early here yet. We're still 10 minutes before the open, but right now we're looking like, just cherry picking a few. It's across the board weakness here, from Johnson & Johnson, 126,000 to sell, to Oracle, 45,000 to sell, to ExxonMobil, 245,000 to sell. They are getting a little bit smaller, so they are getting paired offset a little bit. But right now, it's pretty much selling balances across the board, which would be expected on a day you're down 34 handles. Interesting enough, Palantir, which we haven't talked yet, it does have a buy-in balance, $61 here. Stock is up here in the pre-market, added to the
because it's going to the NASDAQ. That makes it more valuable.
It's not ridiculous. We're just at this point here where they just buy Palantir for any reason whatsoever. And last night it was announced it's going over to the NASDAQ and they couldn't stop buying it. Feels like, feels a little bit, like ridiculous to be rallying a stock for that reason. And then there is another headline as well, something with AI or something. There's always a headline with it, Palantir with AI. But okay. So how you approach this morning, strategy session, quickly, is the way I approach this is I put opening only orders too low. Like basically if the stock's here and fair value's here, I'll throw orders here. And if the stocks just decide to open way too low, a lot of times they come back in. I also, go the other way. If the stock looks like it's going to open too high, I throw it a little bit higher. And then if the stock opens here, I end up short. So, worst case scenario, you lose money. But, in a lot of cases, you put all these orders out there, you don't get filled. They just don't open too low. But if stocks open too low relative to where the S&P is, there's a good opening arbitrage opportunity a lot of times on these options expirations. So I throw out the orders just in case. And, it's like once a year on an options expiration, like, oh my gosh, they all did open too low. I get filled on a whole bunch of stocks, and almost always, it works, the majority of them work out. So that's what I'll be doing here again today, like Bank of America, for instance, offering 421,000 shares, stocks trading, down about, 24 cents in the pre-market. I throw my orders a little bit lower, like 45.51. I have one, 45.32. I just kind of, throw out orders. And if it decides to open like at 45 or something like that, I would be long a whole bunch of stock. Sometimes you see that happen. A lot of times it's nothing burgers, but, it doesn't cost you money to just place opening only orders there. If they don't execute, they don't execute. So that's how I approach this. That's how, I approach option expiration. Always placing orders just in case.
And also the scenario, sometimes you can get someone sleeping on the bed or something, right, in a stock with the S&P.
Yeah, well, and here's the deal. So sometimes what people will do is, they see the big sell amount, so they sell the stock in the pre-market. The problem is that they flip. What if they flip in the last second? You think the stock's going to open way low, and then all of a sudden it opens higher. I mean, so it's a riskier play to believe what you see, because these opening imbalances are often manipulated, played with. There's big institutions that come in right at the last second there. So you just got to be aware that, I don't like to just rely on these numbers as like, oh yeah, this is, for sure. So I try to play it more from the safety perspective of it, where I'm looking at a stock, If it opens too low, then I'll get long, as opposed to, oh, I think it's going to open lower, so I'm going to short it here. And now it opens higher, and now I have a huge loser on my hand.
Yep, you've
right.
you've mentioned that strategy before.
And
Okay,
the
Triple D.
imbalances right now are getting smaller. So right as we speak here right now, some of them, are not as big as they were even when I started the sentence a few minutes ago here. Like Coca-Cola, for instance, 67,000 to sell. A few minutes ago, it was 250,000 to sell. So that is getting offset. Institutional traders, even retail traders are coming in saying, look, you want to open up Coke down 50 cents, I'll buy it. You want to open down, it's only down 18 cents here right now. Wouldn't be surprised me if it flipped green and Coke even opened up on the day.
Are you more out on these trades? You're looking to get out right away, right? You're not just
yeah. Or I hedge it. If I sometimes, you just boom, you get filled $1 million worth of stock. Then I'm like, and I got like 25 positions, then I might just sell S&Ps against it or something just to hedge myself out. But for the most part, a lot of times, you flip them out. I don't know if it's going to be right now. I can already see it materializing here. There's buyers coming in. So in all likelihood, we're going to have a nothing burger open, but you just be careful. You just throw it out there just in case. Like Merck, for instance, it's got a 265,000 share sell imbalance. If that holds, it'll open a lot lower, and maybe it opens too low and gives you an opportunity to get in. Not saying this is long-term investing. These are just trades. So we just had NASDAQ imbalances post, and they are significantly red as well. And that's why you just saw the tick down in the S&P. Tesla, 529,000 to sell. Tesla's trading green right now. It's trying to hold on. Apple, 490,000 to sell. Microsoft, 329,000 to sell. Amazon, 681,000 to sell. So the imbalances on the NASDAQ side are definitely to the sell side as well. So we're seeing that as well, where we're seeing weakness really across the board here.
Okay, Triple D. We're gonna run this puppy till 10. So if you get out of your opening trades, you feel like coming back on. If not, we'll
I'll come back on after, tell you how it went. So I'm just go trade the open. You get this data. You've got to have a broker that actually has the data and carries the feed. Interactive Brokers carries it. It's just in the imbalance feed. Call Interactive Brokers if you're there. I don't think like a Robinhood or something, like it's a discount for a broker. If you're trading for free, you're probably not getting this information. So I mean, I pay commissions for a reason, because I need information. I need to know when there's a huge seller, like I see it at the open here. But there is subscription feeds that you can get to in this. This information is free through Interactive Brokers. They have an IB account. You get this for free. Okay, I'm going to the background.
All righty, let's bring it back to some individual stock news. Always great to get some strategic, thoughts there from Dennis, especially as we're approaching the open here. Let's go to Alibaba. Some earnings reports, and you wouldn't really know that the company reported earnings if you were just looking at the stock trading down about 0.3% before the open here. But the company reported EPS of $2.15 that beat the estimate by 10 cents. Revenue of $33.7 billion that beat by 500 million, so double beat there on EPS and revenue. Cloud Intelligence Group revenue, $4.2 billion, up 7% year over year. International digital commerce up 29% year over year. So some good numbers for Alibaba overall, but after the election and everything, these Chinese stocks have been pretty weak. So I don't know if it's just some disappointing guidance or what it is. Either way, the stock is trading slightly lower as we head into the open.
Yeah, wow, you had to get up early. The early bird gets the worm, just like our pre-market prep. 95.64. One of Dennis's first comments when he came on this morning was, man, I was just tempted to dump the rest of what I had. That was $5 ago here, coming down on the $90 level. Kind of hard to talk fundamentals on these stocks. I mean, you did get the earnings, but just such the overhang. If you are playing this, and now we're coming into a level, the only problem is there's only one low there at 89.32. So if you're trying to pick this up on the cheap, you got an early short off. See what happens at 89.32. After that, you drop off another buck to 88.05. Coming back on the upside here, if you do catch a little bit off the open, a little turn in the S&Ps. Unchanged, that would be a minor number there. That minor number would be 90.58. Your 2-day close comes in at 92. just keep in mind here, this is even lower 2 out of 3. Well, I mean, red bars for the day, but Alibaba way, 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 way off that euphoria high that you had at the beginning of October. Let's look at Baidu 88.48. Boom, same kind of look here. FXI, boom, pulling in, tried couple false bumps, but never really catching a rally here. So there we go for the Chinese stocks.
Let's keep it ticking here. So when Dennis was on a second ago, we mentioned Tesla. Let's talk some Rivian real quick, which Rivian did not have a great day yesterday. This came after Trump announced plans to eliminate the $7,500 EV tax credit. So, in the landscape right now of EVs, if you're a Rivian, you're still growing. That's probably pretty important to you. If you're a Tesla, you probably don't need that tax credit as much. So Rivian, big down day yesterday, I believe closed down about 14%, down another 2% this morning. So, this thing's been a little bit of a wild child because it went from like $10.50 to $12, now back to $10. So I don't know, but losing out on that tax credit, not a good thing for Rivian or any other EV manufacturer that's still in this growth phase.
Fits the take the money and run scenario yesterday. Oh boy, Volkswagen pouring in more money. Bet you they wish they would have poured it in today. But anyways, just selling in the strength on that. Let's see. You got an interesting. I don't know about selling this in the hole here, but I would just look. We came down to the not low for the year, but the recent low of the move. Let's see what happens under $10. I would say between 981 and 10. You're under 10 right now. And I'm not just talking about today, but let's see if the bulls reemerge here. It was there for a long time back in May before you had a nice rally. It was there for a long time in October before it had a nice rally. So let's see. Let's see if the bulls will step up here at 980.10. Tesla, Triple D, just was talking about a potential triple bottom. What we like to talk to you guys about on our show is looking at playing stocks both ways. That was a nice setup in Tesla. You did have two lows at the same area at 322, but when the news comes in, news trumps charts, and it got trumped and it got hit, and there you go. So let's see. There was a buy imbalance in it. I believe. Oh no, it was a sell imbalance. Right at yesterday's low. I'm not going to call this move dead for good because you held 310, 310.27. Yesterday's low 310.02. That is the current low on the session. If in fact you do lose that 310 level, I can't give you anything until you have the next daily low comes in at 297.66. So there was a high the previous day just under 300, the low at 97.66. Keep an eye on that if in fact it does take out the $10 level, the $310 level.
All right, someone in the chat earlier was asking about Nike. We do have some news on Nike this morning, actually a couple different headlines, but the big one here is that Pershing Square, of course, Bill Ackman's investment firm, bought 13.24 million shares of Nike as revealed in the latest 13F filing. So I believe this was an addition of a stake in Nike and not his first position in Nike. I could be wrong, chat. Correct me if I'm wrong there, but Nike popped a little bit in the after hours on that news, and Nike also announced that they raised the quarterly dividend from 37 cents to 40 cents. So it's up 8% on the dividend. Regardless of the stake from Ackman, the raised dividend, stock's not up too much this morning, up about, I'm seeing 49 cents, but perking up a little bit here, Joel.
Yeah, I mean, if you miss this stock at 70 and you're regretting it at 90 and now it's back in, you want to own Nike, you're bullish the brand. I mean, the big boys are stepping up here around 75. You saw that last week, a little bit this week. So as long as it holds in that support area, stick with it here. Maybe you get a little bit of retracement. Looks like you're digging in ahead of the August low here. So, not running it out and adding it to the long-term portfolio like Mr. Ackman. but definitely trying to buy the dip here. In Nike, up 70 cents. I don't imagine. Oh, if well, let's see, 76.98 was yesterday's high. You already came up a little bit short of that. It's 76.53. That's the current high. Where else do we want to go here? How did Palantir do? Well, so much for us poo-pooing and running over to the NASDAQ. That's a big old bump up here. Open 61.01, bottom 60.91, 62.77. That's your high. It's a current high. They're going for a 63 bid here. If, in fact, they could get a 63 bid, look for your all-time high at 63.39. That was your high on Wednesday. S&P's little pop off the open, not holding here, moving in on the pre-market low. Not a good sign here for the bulls, at least early, are not able to distance itself from that pre-market low.
All right. I see someone in the chat brought up Fuel Cell, ticker FCEL. Stock is up 22% here, Joel, this morning after the company announced restructuring plans to reduce workforce by 17%. So you say you're going to cut 17% of your jobs. Stock goes up 21%. I don't know what the math is on there, but we've seen that in the past couple of years with companies like Meta that went through wide restructuring plans, and the market rewarded them tremendously. So we're in this type of market where the market wants the companies to prioritize profits over growth rate here, it appears. And so Fuel Cell getting a nice pop here this morning.
First defense here of the pre-market low is coming into play here. Pre-market low, I have nothing there for you. 30.75 on the first dip. They get to 31 even. Bulls are trying to protect that pre-market low. Absolutely very little under here. So if you're trying to, leaning on that pre-market low, folks, I can't give you another low until an intraday low from 6 days ago at 5,900.75. But the bulls trying to defend that pre-market low. Fuel Cell, I mean, if you were waiting for this news, you had the thing, it got the pop. You're looking at 896. It looks like you already missed that bump. 883 was your high. Now you're fading at 824. So I think 883, 896, that's your major resistance. And I won't call it major, but it looks like you got a little bit of a fade going on. Bulls really trying to maintain a bid here at the pre-market low. A lot of the big stocks are red, so that's not helping things out. Alibaba, boy, they are taking this out to the woodshed here. Selling this thing right off the open, down 275. So Baba, man, what a turn. Let's see if how Baidu is reacting to this. Baidu's hanging on a little bit better, but not liking the Alibaba. Someone also asked about the House of Mouse. You always like to look at his stock post earnings, and they sold it off. You had some profit takers coming in there yesterday. I don't know if maybe some bozo did a ratings change or whatever, but you opened up 110.25. Got a nice pop to 112.69. That's up $3. That's going up against the grain of the market. I don't have an intermediate level here, but maybe just go to your average daily range if you're looking for this thing. I don't know if it has the gas to get to 1441. Yeah, 1481. That was the area the gap fills. So a little nice pop off the open, but I think you're going to find sellers ahead of yesterday's high, which was 1481. Bulls are losing their last line of defense here this morning. Still trying to cling to the 59.30 level. Looks like more sellers are coming in, folks. Not much here on the dailies. As you can look on the S&Ps, I don't want to give you this low and really scare people because that's down at 58.14. Instead, what I like to do is look at an intraday low, right? Your intraday low, next daily low, 5,900.75. Bulls still trying to defend the 59.30 level.
I did want to go to GM real quick too, because similarly to Fuel Cell, GM announced plans to lay off some workers in a restructuring, and not getting the same reaction that Fuel Cell got here. So GM actually down about 0.5% this morning, but I wonder too about the EV fine for GM.
Man, GM, and I knew after its earnings that I wanted to own it, and it pulled back and never. I mean, it really didn't have much of a gap in there. Should have been keeping a closer eye on it. You had the pullback. I mean, I think you're finding an intermediate level support. Like if you're an uber bull here and you think this is going back to its all-time high. Looks like the $57 level is a nice level, at least where the big boys are stepping up. 3 out of the last 4 lows in the lower 57 handle, so I would keep an eye on that. Coming back on the upside, you're not green yet. That's not far away. That's only 57. Actually, you got this kind of interesting. Wow, look at the last 4 closes here. Someone's accumulating or distributing here. Right at I'm showing you here. Look at this. 4 closes in a row. 57.62, 57.71, 57.41, 57.66. So looks like someone's working a piece out at that area. Let's see what happens today. Oh, that really messed everything up on my charts. Holy mackerel. All right. You find me something else to talk about while I get my charts back in order.
Yeah, let's go to analyst ratings land. And we did get an upgrade this morning on Twilio, ticker TWLO, from Monness, Crespi, and Hart. Upgrades Twilio to buy, announces an $135 price target. Twilio currently at around $98 a share. So that's a pretty big premium there, up 35%. If it gets up to that $135 price target. Again, that was coming from Monness, Crespi, and Hart.
Man, who are they? So
I don't know.
So TWLO, Twilio, gets an upgrade. Up 67 cents. I mean, it's holding in here. I'd say where we're at. We're at, wow, you got to look almost a look at yesterday's low here. Don't know nothing. I mean, that sounds like a food service and not a brokerage firm.
A quick Google search shows me, and maybe we'll have someone from on the show sometime. So I'm not saying anything bad. I know nothing about this company, but when I just Google Monness, Crespi, and Hart, they have a 1.2 star rating from 19 Google reviews. So that's the analyst rating on them, is that they're under, people are bearish on Monness, Crespi, and Hart.
All right. Well, better hold 97. Well, I'd love to hear Dennis's opinion on that.
I don't even know what to say. You got healthcare stocks are the story of the day here. They are absolutely hammered, maybe on the backs of RFK, but the party is definitely unbelievable. Look at the XBI, what it has done in the last 5 days. It was breaking out, looking good, looking like we're moving, and it is just went from bliss to piss just like that. This market has turned. And a lot of names here. You'll see banks strong. They're still holding on. The Trump trade still holding on fairly well. IWM doesn't know what to do. It's leaked a little bit here, but there is a little bit of, the pockets of strength, because there is some pockets of strength here today. But healthcare stocks, Merck's down 3% more, Pfizer down 4.5%, Lilly down 2.3%. That's 19 points. Bristol Myers down 2%. Lucky I sold most of that position. Gilead.
Oh man, look at.
I mean, across the board, just weakness. And XBI leading the charge down. IBB as well. Biotech, healthcare, and epic disaster here this morning.
So, Dennis, will this adjust your weekend strategy for the XBI?
Probably not. Probably. We have to look where it goes. I just do that no matter what. My weekend strategy is just buy Friday night and I try to flip out, after hours or Monday morning. Sometimes you get a deal. Sometimes something happens. It probably actually maybe works better when you see so much weakness in. Sometimes you get a relief pop in the after hours. So we'll see. Like, it's a long time between 9:42 and 4 o'clock, but I'll probably still put on the XBI tonight. Like, stocks I have to put on at the close, like XBI. I've been playing the, one thing to consider too is SMCI is going to get listed over the weekend. I don't wonder if it helps Dell. if it does, obviously Dell has been, Dell's down
I
here
don't think
today,
it
but
gets delisted. Oh wait, when's the
Saturday.
date on Sunday? Oh, Saturday.
Saturday. Oh yeah, I think it's
Oh.
going to get delisted. I think SMCI is gone. They're already talking about who's going to replace them in the S&P. It's a disaster. So, and it's down here again this morning. It's SMCI just goes, is it down? No, it's actually up. Look at that. SMCI bouncing. Maybe it's hope that it won't get delisted here. But mega cap tech too is a story of the day. Amazon down $6 here. Meta down another 9. We've been talking about the relative weakness in Meta the last couple days. That continues to lead the charge. Google, you go across the board here. It's tech is a week across the board. Except Tesla trying to hold on. Tesla's actually bucking the trend. And then you've got a lot of like rotation. Defensive names holding up fairly well. Utilities are strong. Banks are very strong. We already talked about those. This is rotation station. Oil is very strong here too. So it's funny, you see the S&P weakness, which is very, very much hammered because of mega cap tech. But there's a lot of stocks still green here today.
Just to illustrate, talking about the mega cap tech, you have the SPY down 0.61, right? And the SPOO's down a little bit more. But look at all on a percentage basis. They're all down over 1% here. With Amazon being down 3%, people choking on some of those Bezos sells here. Dennis, let's check Domino's Pizza. Did it get back up to 460 again?
Wow.
How
That's a
in
sell
the
the
hell
rip.
did that happen?
Look at that. That came right back in. Warren, and Ulta. Did you guys talk Ulta? Ulta was interesting because obviously Warren Buffett. Look at the fade. The fade trade working. Ulta opens down 20, almost went flat. Got all the way back up to only being down 4. It's coming off a little bit now. These opening fades, man. Palantir did not fade, to your point. I actually tried to play from the short side and I had to stop myself out, so that didn't work.
Try it again. Try it again.
I thought trying it again. Pool, I mean, that was opening way up, was trading up, as much as like 20 points here. It's only up 11. But Domino's Pizza, only up 6 here now after being up. Do you see last night? Bring up Domino's Pizza, the algos. You got to see where it went to last night.
Crazy.
You won't even believe it, Joel. You won't believe it.
I know.
What was the high?
518.09.
Those algos are so stupid. Stupid. So stupid. Who the hell buys Domino's Pizza up 80 points last night because Warren Buffett took a position? What the hell was that? I saw it go off and I was like, I knew right away. I'm like, it's 13F. It's got to be Buffett. I'm like, I'll sell it up there, but there was no chance. It swept up there and then there was no bids. And the next trades were down to 470. Man, that's got to be one of the dumbest algo trades I've ever seen. Absolutely ridiculous to buy that up 80 points. It's up 7. Algo, you're the dumbest trader out there today.
Okay, hopefully Algo's not in the chat here.
The algo that bought Domino's Pizza. That was my algo. Oh, sorry if you're in the chat.
Hey, Matt.
Look at Berk.B. Look at Berk.B. Warren Buffett. So while we're talking about Warren Buffett, opens at the low and straight up. Open at the low tick, the very low ticket. Open down $2.50 straight up. Because you know what? When stuff's getting hit, they go defense, and Warren Buffett's still playing defense there. Wow. That's interesting too. That would have been a good buy.
So you got 465.19 as a low, as a open?
The opening print was 465.19 to the tick.
Man,
that was the New York Stock Exchange opening print. Opened at the exact penny low. Zero.
You want to hear a pet? You want to hear a pet peeve?
Yeah.
And we discussed this before. TradeStation doesn't give me the New York Open.
Well, there's got to be a setting maybe for that, Joel. Maybe there's a setting that could do that. So you have two opens, lessons, teaching. Consolidate Open, which is the first opening print on any exchange at 9:30. And then you have the official open, which is the opening price for NASDAQ stocks on the NASDAQ, for New York Stock Exchange stocks, listed stocks on the New York Stock Exchange. So the official opening print is 465.19, which is the New York Stock Exchange Open on Berkshire Hathaway. So that's what to see on those. Just a lesson to teach you guys.
Right, and I mean, the reason you want the New York print is because that's where the liquidity is. I mean,
Well, it's a
that
big liquidity event. Yeah, that's where
yeah.
they put together all the big buyers and sellers that are putting the orders on the NYSE. I participate in that opening print all the time. So on most
Yeah.
of my stocks. And when I place an OPG order, it will participate in that print. It doesn't go to the consolidated open. It goes into the opening print. When I place an opening only order on the NASDAQ stocks, it goes into the NASDAQ opening print. And in the New York Stock Exchange stocks, it goes into the New York Stock Exchange opening print.
All right, Tesla ripping back here, coming back up. Just be aware here that there was a pair. Yeah, there was a pair of lows at 322, old resistance. Let's see, or old support. Let's see if that acts as new resistance here. But boy, you could have got yesterday's low in Tesla there. It pierced it again. People got smoked on that one. The original low was just above 310. They did the old double dip when the S&Ps made a new low, jammed it at 309.22, and now right back up. So if you sold that going through 310, more volatile stocks, you got to give it a little bit more room. But looking now at 322 as potential resistance here in Tesla. AMAT catching a little bit of a bid here. Dennis, what do you have for the exact open in AMAT?
Applied Materials opened on the NASDAQ at 168. So it opened down 18 points right at 168. Low was 167.33, just slightly lower than that. Now it's starting to catch a bit. I mean, some of these stocks, the semis have been absolutely killed. Besides NVIDIA, you can stay away. The semis, the SMH has just been rocked. Actually the SMH, because it's all NVIDIA, hasn't been rocked as hard. But specific pockets, man, like Micron, can't seem to catch a bid. Applied Materials. You want to go into like the Skyworks and the Corvos and those have really been killed. I mean, this market is like love you or hate you and no in between. And if you're in the loved stocks, you're loving this market. You're in the Palantir, which is just relentlessly loved. Valuation, we always say valuation doesn't matter at all when the story is hot. Palantir story remains hot. I tried to short it, punished for it, deservingly. He's trying to short stocks all-time highs. He deserved to get punished. Wanted to be a hero. Thought we were having a week open. Thought maybe she's going to open, and go down. She didn't. I cut out pretty fast. I think I lost about a point. But, I'd be down like 3 points right now here. So you got to cut those losers, or 2 points.
What about solar? First solar, big day yesterday, getting some follow through.
Again, we've got seller exhaustion in a lot of these stocks. And First Solar, if you're going to go into a solar stock, you go with best of breed. But solar is interesting. ENPH has been relentlessly down. Put this in perspective. ENPH at the the middle of September was 120. It got down to 60. So literally in 2 months, the stock lost half its value. There's a lot of bad news in these. Are they going under? It's possible. I don't know that. I don't have the answer to those questions. But right now, I think a lot of these stocks are just so massively oversold. And what you're kind of seeing is a little bit of buy the dip in some of the massively oversold stuff here this morning.
I'd say First Solar. Someone asked about it, man. I mean, if you get up here, you had a low, you got to get a potential gap fill. I wouldn't call it major resistance, but 205.63 would be that was the low. That's your gap fill. So if you have some 200 calls, weeklies, and you're trying to bleed something out of them after you paid up yesterday and they're not making you any money today. See what happens at that 205 area, 205.63. That would be a gap fill in shares of First Solar. Someone else threw something. Oh, Oklo. What happened to Oklo? Oh boy,
Yeah,
oh boy,
this
oh
nuclear
boy.
trade has just lost some momentum here for sure. But I did end up buying some Oklo a couple weeks ago, so I'm still green on it right now. But now it's getting a little bit closer to my cost basis.
Yeah, it's tough. It's still the Steve Miller market. We're going to keep saying it. Steve Miller band market. Take the money and run. And when you get up 20, 30% in the stock in a very short period of time, you got to be taking those gainers. Because if you're not, the market takes them from you. This is the type of market we're in. Even Tesla. I mean, Tesla got way ahead of itself when it went from 250 to 350 in 4 days. I mean, that was just way overdone. I still hold the Tesla. Long term, I think it's going higher. Short term, I mean that and I don't know if you talk the tariffs or the EV credit, the 7,500 EV credit being gone potentially under the Trump administration. It's not good news for Tesla. You can spin that whatever way you want. People are spinning it and saying, oh, it's going to kill the competition for Tesla, and Tesla can handle it, so it's actually good for them in the long run. Let's be dead honest here. How much of the EV market does Tesla have? How much? Do we have those numbers? Anybody in the chat or AB? It's not like Tesla's 10% of the EV market. Tesla is a huge portion. Tesla EV market share. We'll just ask. We'll go into here.
Can I ask Siri?
I'm doing it right now. 3 seconds.
In 2024, in the United States, it was 48%. So 48% of EV sales. So we can say that, yeah, it's gonna, kill all their competition, but they're half the sales. I mean, half the sales in the U.S. And this is obviously a U.S. thing. I'm not looking globally because this EV credit thing is a U.S. thing. So I just don't buy it that this is good for Tesla. This 7,500 EV credit, getting rid of this. It made Teslas all relatively more expensive. So it's not fantastic news. If I had it on for a trade, I'd probably sell into this rally this morning. Again, I've got in the long-term portfolio because I think this Tesla's got so many other stories coming. So I'm going to stick with it. But with that being said, I don't know. Like, it's went a long ways, man. Like 200 to 350.
Yeah.
The damn things like just went nuts. I mean, even me, like almost want to ring the register a little bit and re-enter. But the problem is I don't get back in. So, and that's, where I miss out. But I mean, this market, is the take the money and run market here. So when you get those big gains, take those gains.
How about the data dog? How about someone asking about the data dog here? And the dog is holding up here.
Not bad, holding up. But some of that stuff's even showing some weakness now.
Yeah.
The tech trade's a little bit tired here. I mean, boom. Like, you look at the moves here today, Apple. Amazon is interesting to me. And obviously in the buyer. I think if it gets back down to 200, I'm long Amazon. Huge position in both my wife's. In my position, in my own portfolio. In my wife's position, it's a huge position for her. In my own RSP, it's a small position. I'd like to increase Amazon in my own portfolio, in my own RSP here. And I think it's back down to 200. I think Amazon is your sneaky turning into like a value tech play. I mean, P is like 33 or something like that for P. Cheapest Amazon's ever been. Yeah. And they're not, and it's not going away, folks. They just keep figuring everything out. They're into everything here. I love Amazon. I do think, it's, had a pretty good run. 180 to like 210. That's our 215. That was a little bit overdone. Check back to 200. Maybe you look at that as an entry point. The Bezos 200 brick wall of resistance, maybe it becomes support. So I'm interested in Amazon at 200.
Let's see here. Just real quick with the dog here. I mean, drill in on your shorter term chart, but there's just nothing in here down to 122.67. So I know it's hard to sell into weakness after it was over 130 yesterday, but just not seeing a lot of support here in Datadog. I see Barat, he took a shot at Palantir. He shorted it at 63. The only thing I saw on Palantir, Dennis, I know you got tagged on it a little bit. You got a good level now because it went to 63.39. On Wednesday, you went to 63.50 today, so you could have gotten yesterday's high off it. So let's see. I mean, if the bulls can mount a 63 bid, then maybe you take it out. S&P's coming back down to the lows of the session here, a new low. Sellers dominating in here. Not a lot of support on the dailies. Dennis, RSP, could you just explain what that is again real quick?
Oh, the equal weight? That's just it's your S&P 500, but an equal weighting. So, it's the same.
No, I think they're talking about your portfolio.
Oh, they're talking about the RRSP. So in Canada, you have a registered retirement savings plan. It's the same as your IRAs in the States and stuff. So, I've got money that I put in there every single year, and I run a portfolio for my retirement. So I have in my wife's and I have my own RSP. So, because obviously work for self, so I don't have a pension coming at me. So I put money in that every year, and I buy good companies at reasonable valuations in there. And that's a lot of the times, I'm talking about. I have Tesla in there. I have companies that I believe in, long term. It's different than my trading. So I have a trading account at Interactive Brokers where I'm actively trading everything in and out, moving all around, going all over the place, And then I have my long-term core holdings, which I talk about a lot here. When I believe in a story, I believe in a company, I buy it. Sometimes they work out. Sometimes they don't. Sometimes, I make money. Sometimes, they don't work out. So, but, that's where I had, like a lot of these big gains over the years. It's just buying good companies at reasonable valuation. So that's just my, retirement,
What about Oxy at 50 here? CVX, Chevron has rallied. ExxonMobil has rallied.
They hate Oxy.
You hate Oxy?
No, they do. The market does not like Oxy. It's unbelievable that, we look at where, XLE has went and XOP, where they've went straight up and Oxy does not catch a bid. They just don't like Oxy. I think it's a lot to do that Buffett bought it for so long and now he's not buying anymore. So they don't feel like he's convicted as much in it now. But for whatever reason, Oxy gets no love. Chevron, complete different story. And again, maybe it's, dividend, where Oxy's dividend is very small. Chevron is a dividend, Kramer called dividend aristocrat. 4.02%. ExxonMobil 3.27%. Then little Oxy only 1.75%. So that's the problem with some of the oil stocks. People are buying them for the dividends. Like, well, why buy Oxy when I can get a 4% dividend in Chevron? Chevron, obviously, and Exxon are the two best of breed as well. I mean, these stocks have both been unbelievable. You look at ExxonMobil at basically all-time highs. There's no other oil stock even close to all-time highs. So, with oil as far off as it is from where we were at all-time highs, it's so impressive that Exxon is sitting up near all-time highs. That's best of breed.
All right, it is 9:59. Our first full week of a 2-hour show, folks. Big thanks to our guests. Big thanks to Money Mitch coming in through that first hour. Big thanks to Dennis through toughing it out, even though he's sick. Shout out to AB coming in, making it to work today. We always appreciate that. Big shout out to Slava Davadu. That's Brent Slava in there, giving us some great commentary on the markets, getting some real tidbits there. Folks, we're in the red. The Bears win the week. I mean, there's no way you look at it. The Bears will win the week, Dennis. There's no way we're going to go back over 6,000. Well, I don't want to say nowhere, but go Lions. I know Michigan can't lose because
who do the Lions got this weekend? Wait, who do the Lions got?
Jaguars. They're 14-point favorites. I think it's the biggest spread in the NFL this year.
Yeah.
So,
Wow.
all right, guys. Thank you to everyone who tuned in with this week. We know we had a couple hiccups at some point in the week, but we finished strong today on Friday.
One was StreamYard and one was Juilliard. One was Stream. Yeah. Yep.
Joel messed up that one yesterday.
We'll be back on Monday, 8 a.m. Of course, hope everyone has a great weekend. Stay safe, stay green, and we will see you guys then.